for thestockmatter.com. I'm Brian Johnson, and put your hand in the air if you're a frustrated bear. We've been watching this for a while. We've been talking about it for a while, and once again we saw it again, and that is the bulls are still buying the dips. We're getting still some weakness in not the Dow, but the other two indices. But today, at the very end of the day, we got a huge move to the upside in the last about, let's see here, 3 hours or so, make it an hour and a half. But the last hour and a half or so, we saw a really good march to the upside, especially that last hour. Started to break some, get close to some overhead levels. Never breaking the lower levels. You can see here on the day that we've had this pullback. Looked like the bears might be making some progress, but it was slow going and slow going. And sure enough, here come the bulls. Bought it right back up from the bears. Even after the little 6-point gap down we saw today in the SPX, still didn't make a difference. There's nothing that the bears can do to get their footing right now. They are absolutely slipping and sliding all over the place, and the bulls are having no problems picking up where they can't seem to get to. So we are watching right here. We did not get above these levels here. This is what I'm watching very closely. Overall, we're still kind of moving backwards. Still nothing broken at all from the bull side. We still see it marching upwards, pulling back. Look at this. March up, back, pull up, pull back, pull up, pull back. Up and back and up and back the whole way. There's nothing broken here from the bull side. They are still marching very well on the Dow. Surprisingly enough to me, I kind of thought maybe we'd start to see some weakness within the Dow, following what the other indices are doing, but we are not seeing that now. For the day, everything ended up right around break even when the whole thing was said and done, so we're going to get a lot of these candles on our dailies. Yeah, what does that look like? Oh, I know you guys are salivating, you bears. You guys are like, oh, this is the one. We're going to go down. This is a topping candle. And all I can tell you is that keep your bias out of it. Don't get too bearish, bullish, anything right now on the markets. Just because you see this candle, yeah, it is a potential reversal candle, but that's all it is. It really isn't anything besides a potential candle right now. Look, we saw it right here. We thought, well, maybe that could be something. Straight up we went. We can go back in time and look at all kinds of potential reversal candles, especially on this whole stretch here back in October-ish and before. None of them panned out the way we thought. The market will do what it wants to do when it wants to do it, and it'll decide when to do it. So leaving these type of candles up here absolutely should raise our eyebrow and go, let's see what we get here. But there's nothing about this candle that makes me super bearish yet. I'm going to have to break these lower levels. And right now that is going to be below this 11.8 and really below the 20 for me. The Dow has not been back there in a while. I expect it to visit there very soon. Just a matter of when. NDX 60-minute finally broke this overhead. Look what we did. Bounced up. Consolidate, 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 and pow, broke through at the end of the day. So now this can make whatever, inverse head and shoulders, whatever you want to call it. Doesn't make any difference to me. To me, it's just a consolidation breakout right now. Getting above these moving averages here was big. Doing it at the end of the day, breaking over and staying over 2,300. So on the NASDAQ, things look pretty bullish here at the end of the day. Saw it resting over this weekend on the 20-day, and the bulls buying it right back up today and yesterday as well. So while there was a little bit of weakness, looked like maybe the bears have their shot here to make this one of those, kind of those 1, 2, 3 type of a moves. Not to be today. Doesn't mean it still can't happen, but it is not obviously going to happen with us today. So we're looking at potentially moving up now into this 2320-ish area. Then above that, looking to retest those highs. NASDAQ weekly looks like a consolidation for the time being. We'll wait to see where that closes on Friday. SPX 60-minute, a little bit weaker, as I said, than the Dow. The Dow's been moving up and up and up and up. This one had the big push down. Now we've got this consolidation. I don't know. We talked about where to look, and that was 1291, 1292, and then above 1296, I think takes us right back into 1300. And right now, that's absolutely where we have to be looking at. So put a line right up here, and you can see 1291-ish or so. Overhead resistance still lower at around 1280, 1282-ish down here. Small break below it, only to be bought right. That was when really the buying started. Looked like it wanted to try a little fake break below this little 1282, 1280 level here, and you can see where the bulls started to come back in hard and really start the buying big time into that last 60 minutes of the day. So overall, Consolidation in the SPX. Dow looks good, still very bullish there. This still looks pretty bullish. As long as it stays high, I don't care. It's still bullish to me. And this is just a sideways consolidation, looking like it might be ready to break out. If that's going to happen, I think we'll see that tomorrow. Otherwise, for the time being, on a daily, not quite the candle that we saw on the Dow, but still overall kind of the same type of a candle pattern by the end of the day. So kind of a hammer candle. For me, this means nothing. We've had all kinds of doji candles in here. Those are all indecision candles, and this is just another one to add to the list. I'm just waiting for pushes above that 1292. Really more conservative. You got to wait till it breaks above 1295, 1296-ish or so. Then play it back into 1300, 1310, so on and so forth up the thing. Revisits to the lower side, below 1280, but now really with this 20-day moving average coming on strong, I would definitely wait for a break of the 20-day moving average and put a tight stop, make sure it actually sticks once it's passed. Weekly, consolidation, same old VIX. Look at this. Down, break even, kind of confirming what we saw today. Markets break even, VIX kind of break even, overall not going anywhere, and overall staying right around that 17, 18-ish area, holding to this 20-week moving average as we saw from the beginning, from Monday where we gapped up to and ran down. So overall, still sideways, still moving flat on the VIX. Nobody's panicking here. Waiting for those breaks above 1920-ish and closes above that area on the VIX to start looking at, okay, now maybe we have some fear coming into the markets, but until that happens, nothing to talk about here. Apple breaking up. Look, nothing but a hard push. Once it broke this blue line I had marked in for you, it was off to the races, and this thing just pushed and pushed and pushed through all of it, only to do nothing but consolidate today and another high base breakout. So beautiful move on Apple. Absolutely textbook technical analysis, but would have had to wait for the more conservative traders. Definitely would have had to have waited till the end of the day to get in. Still a buck move in Apple. Still a good trade overall. If you got in on some of this stuff back here, you're doing very, very well. So Apple still looking strong. You can see though, if we go right back to here, look what we've got: up and down and up. So we've got a huge the SPX. Look at that smaller consolidation. This is just the same type of effect in a much larger trading range. But overall, sideways consolidation on Apple right now, waiting for a break one way or the other for you longer-term investment traders. You're still doing very, very, very well with Apple. Even with the weakness that it showed, I was really suspect coming into this week, wondering if it was going to get back below the 50-day moving average. Didn't even test it. Didn't even come back to test it. Certainly would have maybe expected to see that, but not to be. Started straight up yesterday and has continued that today. Now, most of this came in at the very, very end of today, but now two solid closes above the 20-day moving average puts it back in the bullish territory. Coming back to maybe potentially revisit this overhead blue line. Certainly my target, and that's right up there once again around 348 to 350. So Apple continued strength still shows that it could have another $6 to $7 or more in it by the time it gets back up there. Overall, this is just a big sideways consolidation as we saw on a much extended frame on the 60-minute. FAS breaks above, comes back down, breaks back up. Once again, hard buying at the end of the day. Where? Right into that financial market. I start to see that. I start to wonder if it's investors coming in or if maybe the government might have something to do with that. So really too hard to tell, and I'm not going to guess at what that might have been. However, financials were not doing well and ended up doing okay, but break even by the end of the day. Still one of the weaker indices by the time it was all said and done with. A lot of people still a little fidgety about the financial markets right now. Not really much to trade here, though, for me. Just overall sideways, still in this consolidation. My levels have not changed. Go figure. Above $30.50, below 29 on FAS. FAZ, same type of situation. We got the break above the blue line, exactly what I was looking for, but it ended up being a fake out breakup. Pulled it right back in as quickly as it could. So still a lot of indecision. Overall, sideways in the markets. I still have these upper head areas for my longs. This is why I'm putting them up so high, because of things like this. I just can't trust the financial system right now. Just can't do it. FAZ daily, overall sideways. Look what we hit today. got above that blue line, hit the 20-day moving average, and pulled back. Do you guys see why I've been talking to you about the 20 days? They kind of end up being important every now and then. Right now, they are definitely important, not only on FAZ, but on the VIX, on the dailies, on the indices, just over and over and over again. It's lather, rinse, repeat on just about every chart I look at. So, of the more major stocks. Some of you are penny players, and then whatever, those don't really seem to matter. But at that point, of the more major players, the 20 days are coming into effect. Certainly something you want to be watching going forward. I still like it above this area here, above $9 and maybe above $9.60, back into this area. None of my levels have changed from yesterday, and that brings us back to dough for you music people out there. So here we are back at the beginning again. Overall, a sideways chop consolidation day, as you can see by the daily candles, which gave us all of this. Run down, run back up. What's the point? Buy the dips. That's all the bulls are doing. Run down. Ooh, look, we can get it cheaper. Buy it right back up again. Run down. Oh, cheaper. Buy it right back up again. Lather, rinse, repeat. Look for pushes over and above these levels coming into tomorrow, and let's see if we get any continued bullishness in the markets. If we do, I think the SPX can easily reach that 1300 plus range if we can just get back up and over some of these highs that we've been struggling with over the last couple days, weeks. All right, guys. See you again, as always, tomorrow.